trading strategy I've developed over the past 6 months is so simple it's almost stupid, but the results it's produced for me have literally been some of the best I've seen in years. I went from blowing accounts to passing pretty much any eval and getting funded like it's a cakewalk. I'm going to show you exactly how to identify these setups, where to place your stop loss and targets, and give you a stupid amount of examples so by the end of this video you will be able to trade this one simple strategy on your own and pinkies crossed, make some money. So the strategy that I trade every single morning to catch tops and bottoms like a trained frickin' assassin is what I call the order zone strategy. The logic behind it is pretty simple. If we can find where the most amount of orders are resting in the market that will also screw over the most amount of retail traders possible, then we can predict high probability turning points that have massive reward for very little risk. In short, the strategy works because it has to. Orders move the market, so if we can find where the most amount of orders are, then we can also find where the market is likely to move. So trading order zones can be broken down into 4 simple steps. The first step is going to be identify direction and form a bias. If you don't have an idea of where the market is headed towards, then you're not going to be able to trade efficiently because you're going to constantly be changing your mind on whether you think the market's going to go up or down. Pick a direction and stick to it and stick with the overall trend. The second step is going to be identify an order block, aka supply or demand. This is just a point in the chart where we see an imbalance between buyers and sellers. We'll break this down further into the video. The third step is going to be identify a level of liquidity in close proximity to the order block. So essentially what you're going to want to look for is a clear low or a clear high right next to that order block or even inside of that order block. And then lastly, of course, is going to be execute the trade, but the key is to use aggressive risk management. So firstly, let's take a look at a bullish order zone. Like I said, it's very simple. You're just combining liquidity with an order block. And if you don't know what those two concepts are, don't worry because you're about to find out. So firstly, step number 1 is we want to identify a level of supply or demand, aka an order block, okay? In this case, it's going to be a bullish order block or a level of demand. They're the same thing. This right here is a bullish order block. Essentially, it's a point in the chart where we saw an imbalance to one side. In this case, it's a bullish order block because we saw a massive increase in price away from this area and specifically away from this area of consolidation. So we had consolidation, which is balance, and then we had a massive increase in price, which is imbalance. The only way that you can have imbalance is with a lot of money coming into the market, aka a lot of buyers. So we had a lot of buyers come in at this point, which usually means that we had institutional buying or at least big trades come in at this particular level, which makes it an interesting level for us because if big buyers are buying in here, they're probably going to buy again once price reaches that price point. We also have traders that get trapped in that area trying to go short in the consolidation. And so we also have traders that are going to be exiting their positions as soon as we get down back into this area. Now, we don't want to just trade order blocks blind. We also want to use liquidity. What is liquidity? It's basically retail traders' stop losses. Where do retail traders put their stop losses? They put them below lows and above highs, okay? So what I like to do is I like to identify a clear low next to my bullish order block so that I know that there are retail traders getting stopped out once we enter this general area. The reason why I call it an order zone is because we have stacks of orders overlapping one another. We have retail traders getting screwed on one side because they're going to be stopped out once we break the liquidity. And then we also have institutional traders stepping in to buy the market at that same level, as well as trap traders getting out of their trades. So essentially what it's creating is a zone where a massive amount of orders can potentially sit. Now, the trickiest part about this strategy is knowing whether or not orders are actually sitting there. There are many ways to kind of confirm this, but I'm not going to go into that into this video. In fact, I have a tool called Bookmap, which literally lets you see orders sitting on the order book, meaning you can see where orders are on the chart. I'll leave a description down below for that. And if you want to learn specifically how to execute these order zones, there's also the Simple Trader Blueprint, which is a full course dedicated to order zones, as well as a Discord group, which is a one-time payment. There is no monthly subscription, and you're in for life. So if you need extra help, check that out. So as you can see, as soon as we sweep that liquidity and trigger those stop losses with one big red candle there, the balance immediately flips to the buy side and we get a push higher. Now we do chop around for quite some time, but eventually we do make new highs, and that's key to this strategy. For the targets, you want to make sure you're targeting new highs or new lows, or at the very least, a level of liquidity nearby. So in this case, that level of liquidity would be probably these two areas here. This would be an acceptable target, right? These highs right there. That's also a bearish order block. Then if you want to extend your targets, then you can go for the higher highs and beyond, all right? Now, funny enough, in this bullish example, there is a bearish example of a bearish order zone. So let's take a look on the 1 minute time frame, the same exact area. Overall, the trend was up, the bias was up today. So I'm not going to be looking for shorts, but it still could have presented a decent trade opportunity. If we take a look right over here, we're going to see what I call a bearish order zone, okay? And it was actually tested a few times. So a bearish order zone is the exact opposite of a bullish order zone. Instead of a bullish order block, you now want to look for a bearish order block. Again, that just means a level of imbalance, so an area where the market shot up or down strongly away from, and then you want to look for a clear high next to that order block. Okay, so here we have two clear highs. So in this case, we had an initial test right here. You can see we swept that high and into the order zone, right, into the imbalance, the bearish order block, and then we got a little bit of a move lower there, but then we created a new high right there. And this is where you actually get that big volume coming in. We sweep the highs, we take out all those stop losses. We're still in that imbalance, that bearish order block. And then you can see right here, we got a pretty nice move down and away from that area. Now, guess what? We went down into, yet again, another bullish order zone. Why? Take a look right here. We have an area where price skyrocketed away from. We have liquidity lows resting just there, and because the overall trend is up, the bias was up, you can see that this order zone worked out a lot better. Okay, we went all the way back up to those highs. So that is how you identify both bullish and bearish order zones. Now, you heard me mention that the bias for today was up. So how did I know to only take long trades and avoid the short trades despite seemingly being in a choppy market? Well, we just apply the same logic of order zones to the higher time frames, right? Where are the most amount of orders sitting? So what I did is when I came into the morning, I checked the 4-hour chart and I just wanted to see where were we at? What's the context of the market? Okay, and the context was that we had just rejected this big bearish order block, right? This big area of imbalance, aka a level of supply up top. Okay, you can see we barely just made it into that level of supply before we saw a massive rejection down. Okay, so I came into the market roughly around here, this 4-hour candle, and so what I also saw is that we had reached essentially the target for the day for the bears, which is going to be this area here. Why? Because that is where we consolidated before making this next leg higher. So this is a level of demand, aka a bullish order block. So I knew that this was the target for the bears, and when we actually zoom in a little bit, okay, the opening bell was right around here on this candle. This is the 9 a.m. candle. Okay, that candle immediately came in to this area that I had marked out, and we started holding, right? We saw this this big wick down into the area, and it held, okay? So when we zoom into that 1 minute time frame, you can see we pretty much held that zone all day. So when the market first opened and I saw we were holding, especially when we took out these lows in that zone and then V-bottomed back up, okay, that's how I knew that, okay, we may actually be bullish for the day, and so I want to be buying pullbacks. And so the pullbacks that I bought were simply bullish order zones, okay? And this, again, was on the 30-second time frame. So now you'll notice that this bullish order zone right here, okay, that I just showed you, was actually also a retest of that 1-hour zone, okay? So basically the whole play for today and the whole idea was that I didn't want to get short into this bigger level of support on the 4-hour time frame, right? So this is how you need to use the higher time frames. Is you use them for context and direction, not for entries, okay? You want to just know what is the context. If we're in a big area of support, do you want to be short into a big area of support? No, you don't. You probably want to stick to the longs. So today I was long biased because we were in that area of support, and then we also had tons and tons of liquidity, aka highs, resting above for the entire day. Okay, so eventually what we did on the 1 minute time frame once again is we bounced in this area and went all the way up to those highs, aka liquidity, and that was pretty much the end target for the day. And now we're kind of just chopping back and forth. So this is a good note to write down, is make sure you understand the context of the market. Are we in a big area of support? Where are we at on the higher time frames? What's the general trend? Okay, are we making higher highs and higher lows? You can see on this overall 4-hour time frame, we are still making higher highs and higher lows. Okay, so overall strength was up, and so of course if I'm going to be trading, I'm not going to be shorting into a level of support on a massive uptrend. Okay, so now let's do some backtesting examples of trades that I've actually taken in the past, and then I will show you some live examples of trades that I took in real time so that you can see exactly how I manage these trades. So this is going to be a bullish order zone. I'm going to give you a couple seconds. Can you spot the bullish order zone that has just recently formed here? 3, 2, 1. All right, let's get into it. All right, so we have this area of imbalance right here. We have a consolidation followed by a continued push higher. This is the bullish order block, aka demand, okay? Now, we test this area of demand one time, but this doesn't mean that there are no longer orders sitting there. It just means that there are no longer orders resting, particularly where price has tested, right? But what this has done is now created a level of liquidity because we now have a low resting in that area of demand, okay? So now what I want to do is I essentially just want to look for trades beneath this low right here. So in fact, the zone that we're actually going to look to trade is going to look more so something like this because we're only interested beneath that low, okay? So this is an actual trade that I took in real time. Let's play it out. What we want to look for is a long beneath this low, okay? That is the trade. Why? Because we want our trade to be where the most amount of orders are sitting. So now for example's sake, let's just place a limit order resting in that area, and we'll place the stop loss beneath this low right over here and play it out and see what happens. Our target is going to be at the highs over here. There are two targets technically that you can target. You can have this high over here and this high over here because those two areas of liquidity. So that means the first target is about a 2.3 risk to reward trade. The second target is a 3.7 risk to reward trade. All right, so now we have entered the trade. It's swept through the zone a little bit, which is a common occurrence. So sometimes I'll re-enter if I get stopped out a little too early. Let's see what happens here. All right. So this is a textbook example of an order zone. Now, I don't have to tell you what the bias for this day was. It was clearly an uptrend day, right? No point in trying to fight this. And just to prove that I took this trade, here are my executions on the Ninja Trader. Okay, I actually took two trades this day, one being down here, which was an absolute bottom tick. Unfortunately, I got out pretty early. And then another trade over here, which is the one that I just showed you, where I bought on that big red candle there. And just like I told you, okay, two targets, you have these highs here. So once we swept those highs, I will admit I got a little bit scared and started exiting a little too early. And then of course it rocketed away higher. All right, now let's take a look at a bearish trade that I took. Okay, this is pretty much the opening bell. This is 9:50. So market just pretty much opened here. So where is the bearish order zone? Now this one's a little bit more complicated, but it is still within the rules of a bearish order zone. Okay, the zone is going to look something like this. It's kind of massive. It doesn't have to be that. Sometimes I'll just shrink it down. If we look at the 15-minute chart on this day, we can see that there was actually a bigger time frame bearish order zone. We had these highs right over here, as well as the bearish order block resting just over there. We swept those highs and rejected them hard, which now means that my direction is probably going to be shorts. I'm looking for shorts and perhaps target the lows right over here, okay? So let's drop back down to the 1 minute time frame and let's see how this trade plays out. The order zone is going to look something like this. We have a high right there. We have the bearish order block right there. So now we have liquidity. We have our order block, aka supply there. So let's see what happens here. We would take a trade in this general area here. So let's put our order into that zone. Let's risk above that zone and we can target the lows just like we said. Okay, so that's going to be about a 3.48 risk to reward. All right, and now let's play it out and see what happens. Okay, perfect trade there. Now, Of course, in hindsight, this looks like a perfect trade. And, you know, if you were able to spot this, it was. But not everyone is perfect. And this is how I traded it right over here, okay? So this is the same exact chart. Same exact chart. We have our zone right over here. We have our liquidity right over here. These little highs. Those highs get taken out. And you can see I did short pretty much at the top, but I did short also earlier over here and got stopped out. So sometimes that's the trickiness of the strategy, is sometimes you'll see you know, multiple zones in one swing and get stopped out a little bit early, but overall I still caught it and rode it pretty much all the way down, and definitely took some early targets as well. So in hindsight, of course, if you just held, that's a perfect trade, but when it actually comes down to execution, that's when things definitely are not so perfect. All right, so now let's take a look at a live execution trade. This is going to be a bearish example on one of my live streams. So firstly, let's see the setup that I'm looking at here. You can see we have our bearish order block right over there. Why is it a bearish order block? Because we had consolidation, or an imbalance, followed by a massive continuation. So that is a definite area of supply. Then we had a retest of this area. This is now our high, our liquidity. Okay, and then we take out this liquidity, but now form a new high here. So this is now essentially the new order zone, anything above this high right here. Okay, so this is the trade that I'm going to take. I'm going to fast forward here. Okay, so you can see there, we took out this high and immediately we start to come down towards the lows. Okay, so this is basically the two targets that I have in mind, maybe three there. But essentially, we are just targeting the clear areas of liquidity on this very clear downtrend, okay? So let's fast forward some more. Okay, now here is the actual trade live, okay? So you can see I pretty much caught the top of that area right here. It's the same exact chart. Okay, this is just the NinjaTrader platform where I'm trading on. I only managed to get one contract in, but, you know, who cares? It's still a trade, a good trade. Okay, so shorted essentially at the highs because we swept the highs, we swept the liquidity, we swept the order zone, or at least we held the order zone. All right, and now let's see, I don't remember how long I hold this trade for. Let's see what I do with this. I'm already at a break even. Okay, and you can see that I actually have marked out a little bit of a bullish order zone in this area. I'm still in this trade. I forgot this happened. Barely misses my my break-even order there, and then capitulates back down. You can see I'm pretty happy about that. Okay, now we're sweeping the lows there, so I'm getting a little bit nervous. It's essentially a bullish order zone because this is a strong area where we V-bottomed, and then this is liquidity here. All right, so if I had to guess, I'm probably going to get close to, yep, there it is. Yep, closed out my trade right there. So shorted up here, covered down in here. Okay, a pretty nice trade. All right, moving on to the next trade. Again, it's a downtrend, so I am looking only for shorts. I have a short bias, okay? So now this is in the same day, and we are going to once again look to short at a bearish order zone. So where is the bearish order zone? Right here, as you can see, we have a consolidation and then a strong continuation away from that area. So this is our order block, our bearish order block. And then we also have these multiple highs just before that bearish order block, which now means that this is going to be our area of interest, our order zone. Okay, so I'm looking to get short in this area. So let's fast forward the tape and see what happens here. All right, so you can see immediately we take out those highs, we take out the liquidity into the bearish order block, and a strong rejection. This is exactly what you want to see. And now let's take a look at the trade execution. Okay, you can see here that I got short right as it was starting to break to the downside. Okay, so a little bit of a late entry, not exactly the top, but hey, who's complaining? But this is an example of just how powerful these order zones can be. I mean, pretty much all you have to do is get in around the zone, risk off of the highs or the lows of the zone, and try to ride it down to new levels of liquidity, which are resting right here and there. Okay, so those are probably going to be my targets if I had to guess. I don't remember what happens here. Yep, you can see I'm placing my targets right now. I know myself so well. All right, and there's target 1. I hit 1 target out of 2 contracts. And if I had to guess, I'm going to trail the last of the contracts. Let's see what happens here. We start pushing back up. Oh, is this going to be a break even? We're going to go back to break even? No, we are not. All right, so there is the next leg lower, the continuation, and there we go. I start trailing my stop loss because that is part of good risk management, is capturing the most of the move you can, as much as you can of the move. And let's see if I get stopped out here. And yes, I did get stopped out for my profit on the trailing stop loss. All right, so those are 2 live examples, and you can see I am almost always moving to a break even very, very quickly. As soon as I have been proven right, as you can see here, when I trade, I'm usually catching the top or bottom, okay? So when I have that confirmation that I've caught, a top or a bottom potentially, then I take my stop loss and I move it to break even pretty much immediately. And I'm really usually not risking more than a few points per trade. But the upside, if you do catch that top or bottom, is huge, right? Because you're going to take it all the way to the next level of liquidity. So you're basically entering at the top, risking above the highs and targeting the lows. I mean, you do the math, look at that risk to reward, right? This is just insane. So it gets really hard to lose money as long as you don't make the mistake of over trading and you trade like a sniper, okay? This is how I trade best, is when I'm patient and wait for that great entry, wait for the confirmation, wait for everything to align, and trade like a sniper. So speaking of what not to do, here are 3 rules that I follow at all times to avoid major drawdowns, major losses, and losing streaks, okay? Number 1 is don't try to trade against the momentum. Don't try to catch a falling knife. Go with the momentum, go with the overall direction, because that is going to make your trading a lot easier and make you be able to catch those tops and bottoms a lot easier as well, because you're not fighting against the trend. Okay, number 2 is going to be do not trade more than once or twice per zone. Trade like a sniper. Over trading will kill you. Because I trade with such a small stop loss, it's very easy for me to go on a massive losing streak if I'm not careful. And because of this, I limit my trades to 1-2 max per zone. If I get stopped out twice, I am completely out. I don't even care if it looks like it's going to reverse anymore. I'm just out because I don't want to end up trading 10 times in the same zone and getting stopped out 10 times using a small stop loss, because that does happen quite frequently when I go on tilt, okay? I'll start over trading and, I'll end up taking 10 losses in a row on my worst days, okay? And even then, I'm not losing much, but it is something to avoid. And then the last thing is trade small, but win big, okay? So I only trade micros. I trade 2 to 4 micros every trade on the NASDAQ, and my stop loss is only a few points, but my targets are huge, right? My targets are, 20, 30, 40, 50, 60, 70 points sometimes, and I'm only risking 5 to 10 points per trade. Okay, that is the key to profitable trading, is having great risk management, trade small, but win big. Okay, I know it sounds simple, but that is because it is simple. Keep your losses small and maximize your winners as much as you can. Now, if you are struggling to trade and you need more help, I do have the Simple Trader Bootcamp. The link is in the description down below. Once again, this is a full course on order zones and how you can use them to trade profitably. And you also get a membership for life in the Discord. You get an exclusive Discord role where you can ask me any questions you want about the order zones and the way that I trade. But also, if you're on a budget, there is the completely free Simple Trader Bootcamp. That's the free playlist on my YouTube channel. Link in the description down below as well, and probably put it somewhere over here, okay? Thank you so much for watching. If you enjoyed this video, if it helped you at all I ask is you leave a like, comment, subscribe, follow along as I continue to improve this strategy and, of course, teach it to you. Thank you for watching once again. I'll see you in the next one. Peace.